Good afternoon, everyone. On behalf of Supriya Lifescience Limited, we thank you for taking the time to join us today for this landmark event in the journey of the company. We welcome you to the virtual brokers and analysts meet on the announcement of the company's forthcoming IPO. Before we begin, I'll take a moment to introduce the spokespersons from the company. We have Dr. Satish Vaman Vag, the Chairman and Managing Director. We have Dr. Saloni Satish Vag, the Whole-Time Director, and Mr. Ashish Nair, Chief Financial Officer. We also have senior investment bankers on the panel who represent the lead managers to the IPO. We have Parin Savla, Senior Manager Investment Banking at Axis Capital Limited, and Mr. Sumit Bagri, Senior Vice President at ICICI Securities Limited. I'll now do a quick walkthrough of the conference guidelines. All microphones have been placed on mute. We will have a presentation by the company spokespersons, followed by the Q&A session. The questions can be typed in the Q&A panel available to you, and they'll be read out to the management in the Q&A session. I now invite Parin Savla from Axis Capital to initiate the proceedings.
Thanks. Good afternoon, ladies and gentlemen. On behalf of Axis Capital Limited, I would like to welcome you all to this virtual brokers and analyst conference for the IPO of Supriya Lifescience Limited. I hope you all are doing well and keeping safe. Thanks to this virtual format of the IPO press beat, we have members of the broker and analyst community from across the country attending this session today. We at Axis Capital feel extremely fortunate and thrilled to be associated with one of the key Indian manufacturer and supplier of APIs. Before we start, I would like to highlight a few points about the company and the issue. Just to start with, Supriya Lifescience is the brainchild of Dr. Satish Vag, the one who dared to dream and had the courage to follow it. In 1987, that dream became a reality and Supriya Lifescience was born. Visionary and dynamic, he never deterred in his determination and commitment to build this world-class organization that we all know today. Dr. Vag is not just an inspiration to fellow Indian entrepreneurs, but to anyone who has a dream. Dr. Saloni Vag and Ms. Shivani continue the legacy, being instrumental in driving the growth of the company in future. Supriya Life Sciences is a pioneer in multiple therapeutic segments like antihistamine, anti-allergic vitamins, and anti-asthmatic. Its business model is a perfect blend of domestic and global exporting capabilities, with the company having long-standing relationships backed by consistent product quality and a global footprint that extends to 86 countries. It boasts of a state-of-the-art manufacturing facility that is combined with advanced R&D capabilities. It has a proven track record of operations delivering strong financial performance year after year. This can be visible in its revenue growth and key profitability ratios. In a dynamic and constantly changing industry, it has been Supriya Life Sciences' ability to adapt, reinvent, and innovation that has kept it at the forefront in the industry. This unique business philosophy, on top of promising economic trends, make it a very well positioned to seize the next phase of growth opportunities. We believe that Supriya Life Science offers a huge growth potential to investors who would be onboarding this journey post its capital markets debut. We also have with us my fellow banker from ICICI Securities, Mr. Sumit, on the webinar today. About just a few points I would like to highlight about the IPO. The issue size is 700 crores, comprising of a fresh issue of 200 crores and an offer for sale of up to 500 crores by the promoter. The price band is set from INR 265 rupees to 274 rupees. The main book opens from Thursday, December 16th, 2020, December 16th to Monday, December 20th. The anchor book opens on Wednesday, December 15. We have received really strong interest from marquee domestic as well as foreign investors, even amidst a very volatile capital markets, which is a testimony to how investors have acknowledged the trust that the company has built over the years. So, without me taking much time, I would now request the management team to take you through their journey and future growth strategies.
So thank you, Pareen, for this introduction, and thank you to everyone present on this call for giving us the opportunity to talk about Supriya Lifescience Limited and give you a presentation. Before I move into the presentation of the company, I will request our chairman, Dr. Satish Wagh, to talk a little bit about his journey over the last 34 years and how he has built Supriya to where we are today.
Good afternoon, everybody. Myself, Dr. Satish Wagh, Chairman and Managing Director for Supriya Lifescience Limited. I did pass my Bachelor of Science in 1977 with distinction, and after passing, I wanted to do of my own. But before starting anything, you must take an experience. So I have joined my maternal uncles who were into pharmaceutical industry, having a plant at Ambernath. From 1977 to 79, I was learning with them in the production area, in the quality assurance and the quality control. Till 1979, I was in Ambernath. After that, they were facing issues with Dr. Datta Saman Labor Union, who was taking over in all the industrial areas nearby Mumbai. So they decided to have additional plant which is at Chiploon. Now Chiploon historically has three manufacturing industrial areas. One is Ganekhatpoli, Lote Parshuram and Kherdi. We did go with two manufacturing sites, one at Ganekhatpoli, manufacturing API, and the intermediates we were manufacturing at Lote. Now, Lote, we all know that today is the largest chemical manufacturing hub, and we have companies like Garda Chemicals, Vinati, Rallis India, Excel Industries, and recently even Coca-Cola has taken 75 acres of land. So this is how the growth of Lote Parshuram is taking place. Now, when we went there in 1979 80s to 1986, I could learn the entire process how to start an industry, like selection of the land, construction of the buildings, erection of the machinery, testing of the raw materials, taking productions, including all the licenses with the government authorities. In 1986, when I asked my maternal uncles what is I'm going to do with the organization, they told me to continue with the salary, which I was never interested, and I was drawing hardly 1140 rupees. My initial starting in 1977 was 110 rupees salary and 8 rupees second class pass. That's my career for 9 years. After leaving my maternal uncles with an assurance that I will not do what they are manufacturing, I came back to Mumbai. Comes from a middle class family. My father worked for 39-40 years with the American company called Firestone Tire and Rubber Company. We were five brothers and sisters. So my parents only gave me 35,000 rupees to start a plant. Now with 35,000 rupees, it was very difficult to start a plant nearby any industrial area in nearby Mumbai. So I decided to move to Chiploon because Chiploon those days land was very much cheap, 2 rupees 50 paisa per square meter. So I took 4,000 square meter of land and gave a birth to Supriya Chemicals, which was then converted to Supriya Life Science Limited. Now, when I did the first manufacturing, I didn't go with any APIs. I went with a product called dioctyl sodium sulfur succinate, which was widely being used as a wetting agent in the textile industry. I used to manufacture with the help of my few friends who helped me to start this particular product and its production. I was selling my all products to textile mills in Mumbai, in Rajasthan, Pali, Balotra, Jodhpur, and Jaipur, also in some parts of the south, Erode. But again, I started facing problems that in 1979, again, the in 1989, sorry, the all the mills were closed because of the labor union leader, Dr. Datta Saman. And then the textile wetting agent I was manufacturing only for few to take care of the day-to-day expenses. Then I decided to move to my pharmaceutical own industry. I had very good friends like Professor M. Sharma, who was the chairman of UDCT. I went to him and I got an assurance from him that he will certainly help me for doing some activity into API. He connected with me Dr. S.S. Karmarkar, who was the last plant director of Siva Gaigi in India. And with the help of Dr. Karmarkar, we launched the first product in 1991-92, chlorpheniramine maleate. It was an antihistamine, anti-allergic, widely being used in the therapeutic category. Those days, we all know that the government of India used to give exemption for exports 80 and due to that exemption, I was keen to penetrate my product rather than in domestic in the exports. Like that, we entered into export market with through merchant exporters. Then again, with few contacts, I personally went to Singapore, Hong Kong, and Thailand and tried to penetrate directly into these areas. In 92-93, when we started this product, we started with 500 kilos. We soon could understand that we have to increase our capacity. We went to 2,500 kilos. Then we went to 10,000 kilos. And today I'm very proud and happy to tell you I produce roughly around about 35,000 kilos per month, catering entire globe, almost more than 87 countries and 1,299 customers all over the globe. We are present currently into EU. We are present in Latin America. We are also present in China. We are present in Korea, Japan, and many more countries. Now, while manufacturing this product in 1994, I used to go to China for buying my raw materials. When I used to go China, people used to ask for chlorpheniramine maleate. I was really getting confused when China was catering all over the globe APIs. Why? How come the Chinese are asking chlorpheniramine and maleate? After discussing with them in detail, I could understand there is a big potential in China because China has big formulation facilities and they cater all over the world for tender business. So, because of them, when they approached to me, I started discussing with them for registering the product chlorpheniramine maleate into China. Those days, we paid 25 lakh rupees for registration charges with China CFDA. Also, we paid 25 lakhs for translation. This is how 14 years back it was our first entry in China for selling the API and registering the API. Now today we are almost registering 7 APIs. The cost of the registration has gone up because the Chinese CFDA are charging 1 crore fees for registration and 1 crore normally goes for translation and then submission to the regulatory authority. So these also 7 APIs, when we are registering, we have seen the growth because these are being asked by the Chinese end users. Looking at those 7 APIs, I could understand and tell my team do understand when China wants these API means China is not competitive. They have lost the edge of these API manufacturing and therefore we should focus in registering in China so the whole world market will be open to us. Now while doing that, I was always giving importance because in exports, if you want to continue, you have to have a regulatory department. We have a very strong regulatory department. Almost 48 people are working round the clock. We do currently, because of the corona, we are doing virtual audits. But when there was no corona, we used to do almost 230 to 240 audits per year. This is how we have reached all over the globe, including almost 87 countries 1,300 customers. So this is our main strength, key area. We keep on traveling regularly in Southeast Asia, almost meeting the customers. We travel in Latin Americas. We travel in Europe. We have small business and presence in US, but that now in the near future will be increasing. Also, we have some small share which also will be increased in Japan. So this is how our footprint we have established all over the globe. Now, while doing this, we always used to get lot of opportunities asking that many of the APIs should be added to the basket. And many people also wanted the second generation to come in the business, and very happy that my second generation, my two daughters, both of them have entered into the business. And professionalism was very important, which I learned in my 34 years. So last 6 years I decided to go professionally. We brought CEO, we brought CFO. Currently our CEO is almost 29-30 years experience. Is a techno commercial working in the multinationals like Novartis, Sanofi, and Perigo, Dr. Reddy's, and many more organizations. We have a CFO, Ashish Nayak, who has also 25 to 30 years of experience. So this is how I have strengthened the company is concerned professionally. We have totally almost 5 to 600 people working in the plant. We have seen that if you really want to grow, you have to increase the capacity. We earlier had 325 KLD plant, but there were certain products which were regularly asked by the customers. Since we did not have the capacity, we had small batches which we conducted in the plant and gave to our customers with an assurance that we will give them in bulk within the next 2 years, but they can validate and they can take care as far as the trial batches are concerned, and regularly can be completed. Now we recently launched again in the month of June 2021 215 KLD plant, which will certainly take care of all these APIs which we are focusing 2 years back. They will come into volume and they will be penetrated initially with the non-regulatory market and also regulatory market soon, because we have already applied for the drug master files and CPs. This is how I was strengthening my company, because I was seeing the future. And after seeing this future, the investments were done. Now, while doing that, we are also trying to improve our infrastructure, a bigger size of a warehouse, a bigger size of a R&D, a bigger size of a quality assurance, quality control. So all this considering, we have been investing regularly. In the couple of months, we have invested a large amount of money to give the better infrastructure for the organization. You must understand today, many more organizations like multinationals, Johnson and Johnson, GSK, are very much interested than in the quality. Also with the EHS, we have strengthened our EHS, giving the importance of the world today for the environment. We have 17 lakh liter bioreactors. We have already ME. We have a TFD. So all these infrastructures coming in presence, I decided, looking at the future, for many more activities. China Plus also is an area where many more organizations which are moving multinationals from China would like to come to India. It's a good opportunity. Therefore, I decided to go to the investors, because that's the next level. I have come from a small scale manufacturer to a middle scale. Now, from middle scale, it's a transition to the large scale. And I'm quite confident I will definitely do by my best, and I will deliver good amount of returns to the investors. Thank you very much for listening and giving me your time. I'm here. Any questions are there, I will certainly answer. Now I hand it over to Dr. Saloni Wagh. She will give you the brief of the organization.
So thanks to our chairman for sharing his journey of last 34 years and how he has built the company today. Briefly taking you through the presentation, starting with we are one of the leading API manufacturing companies with focus on high value and niche products. Currently, we have about 38 APIs across different diverse therapeutic categories. So if you look at our revenue generation therapy-wise also, it is very, very robust. Having said that, some of the key therapeutic areas that we currently operate in are antihistamines, anesthetics, anti-asthmatics, vitamins, and antihypertensives. We are one of the largest exporters of antihistamine chlorpheniramine maleate from India. We are also the largest exporters of anesthetic ketamine hydrochloride from India. We are also one of the largest exporters of anti-asthmatic drug salbutamol sulfate from India. Talking a little bit about the manufacturing facility itself, like our chairman mentioned, we have always focused more on penetration into regulated markets. Hence, the current site is 3-time US FDA approved. In fact, it is also approved by the European Authority as well as Health Canada. The current site has a capacity of about 547 KL per day. It is spread across 23,806 square meters, and it is located at Lotte Parshuram Industrial Area. Since the beginning, our focus has always been more on exports. So even today, if you look at the revenue generation region-wise, 77% of the total revenue is generated from exports, and about 23% is domestic. This 77% is also spread across almost 86 countries today and different geographies like Latin America, Southeast Asia, Europe, which is one of our strongest regulated market, North America, and the other parts of the world. We have a long-standing relationship with our key clients. Some of the large end users that we are catering to are LNK, which is a US-based end user, Mankind, which is one of the largest end users in India. Then taking you through the financial snapshot of the company, if you look at the growth in the last 5 years, we have done phenomenally well, not only in terms of top line but also in terms of the margins. The revenue has grown from 285 crores in FY19 to almost 396 crores in full year FY21. For the first half of FY22, we've done a top line of 230 crores. The EBITDA margins has also grown from 25% to almost 45% for full year FY21. And for the first half of FY22, we've done an EBITDA margin of 42%. The PAT has also grown from 13.7% to 31.25%. And for the first half of FY22, we have done a PAT of 28.67%. So the company is doing really well in terms of top line as well as bottom line. I would like to highlight one of the key focus areas and the strengths of the company in this particular slide. If you look at the different products that we have, the different therapies that these products are coming from, and all the certifications that we have for these products, I think this is really an asset for the company because we have managed to register these products across different geographies with different health authorities. I would also like to take this opportunity to highlight a few key strengths of the company. Starting with the first, which is the significant scale of operations that we have and the leadership position that we have in our key products. Like I mentioned before, for the top 3 products that we manufacture, which is chlorpheniramine maleate, ketamine hydrochloride, and salbutamol sulfate, we control a large percentage of exports from India. For chlorpheniramine maleate, it is about 50%, for ketamine 65%, and for salbutamol sulfate about 40%. The other key strength of the company is the diversified therapeutic categories that we currently have. If you see in the last 4-5 years, most of the therapies have shown good growth. The goal going forward would be to add more and more therapies which go in combination with the existing basket so that we further de-risk this portfolio. In alignment to what I just mentioned before, some of the new products that we have launched this year are complementing with the existing therapies like decongestant molecules goes in combination with antihistamine, anti-allergics. And because we have a very wide global presence across 86 countries with a very large customer base, we would like to leverage that and keep on adding more and more products into the basket with diversified therapies. The other key strength that I would like to highlight of the company is the backward integration business model. The top 12 products which contribute to more than 60%, 67% of our total revenue, we are fully backward integrated. And when I say backward integrated, I mean we do not buy any advanced intermediates N-1, N-2 from outside. We manufacture all of these APIs right from the basic chemicals. Because we are not relying on any external parties, we have not faced any kind of supply chain disruption. And it also, in fact, ensures that we have the most cost-effective product in the market. The one thing I would like to highlight into this slide is the vision of the company for the last 5 years. where we have just got it started, by penetrating into more regulated markets. And that would be the vision for the company going forward as well. If you look at the total percentage contribution of regulated markets to the revenue, for FY21, it was 38%. For the first half of year FY22, it has in fact gone up to 49%. So more and more focus on penetration into regulated markets where we are able to get a better average selling price of our existing products is something that we are focusing on. These are just some of the key customers that we are catering to. Like I mentioned, very large end users across the globe. The other strength that the company has, which has helped us to get all the regulatory certifications and penetrate globally, is the advanced manufacturing capability and the R&D capability. Currently, we have a site where we have 4 manufacturing blocks in operation with 7 clean rooms. The total capacity of this site is 547 KL per day. If you look at the capacity utilization, it has grown from 52% to almost 70%, 71% for FY21. That is one of the reasons why we have recently added a new production block. The other thing that I would like to highlight here is all the regulatory authorities that have already audited and approved the site. So US FDA, European Authority, TGA Australia, Korea, NMPA, China, Health Canada, are all the authorities where we have already registered our products. The other capability that we have, which is unique to Supriya, and the reason why we are dominating in the portfolio that we are offering, is our capability in terms of handling complex chemical reactions. We handle a lot of complex chemistries like nitration, Grignard reactions, high pressure reactions. We also handle narcotic products in the portfolio, light sensitive molecules, temperature sensitive molecules. And the scale at which we are operating these molecules is something that requires a lot of expertise that we have built in the last 30 years. The R&D has to be supported by the manufacturing capabilities has to be supported by a very, very strong R&D. The current R&D lab that we have at site is DSIR approved. We are also, like our chairman mentioned, on the verge of expanding this R&D setup so that more and more products are infused into the basket going forward. This is the board of directors that we have currently. Dr. Satish Wagh, who is our chairman and managing director, Dr. Smita Wagh, who is a whole-time director, myself, Dr. Saloni Wagh, I am a whole-time director, Ms. Shivani Wagh, who is also a whole-time director in the company, Mr. Balasaheb Sawant, who is a whole-time director in the company and responsible for complete site operations. Other than this, we also have a very strong and a robust independent board of directors who come from different sectors like finance, education, chemical, pharma. They add a lot of diversity to our board and they also add their experience to our board. The other thing I would like to strongly emphasize here is the second line or the senior management that we have in place. Like our chairman mentioned, in the last 5-6 years, we have really focused on building a very strong second line so that the organization can run in a more professional way. So we have a CEO, a CFO. We have recently taken our new chief scientific officer, our chief marketing officer. They have been working with multinationals for over 15-20 years and they definitely bring a lot of experience to our company. I will now request Ashish, our CFO, to take you through the financials of the company.
Thanks, Dr. Saloni. Reiterating what Dr. Wagh as well as Dr. Saloni stated earlier, there has been a phenomenal growth both in the top line as well as the profitability of the company. Starting from the top left corner, the revenue has grown. FY19 it was 286 crores. FY20 we did 323 crores. FY21 396 crores. H1 FY22 230 crores. So from FY19 to FY21, that's a CAGR growth of around 17.7%. The margins have grown up from FY19 47%, FY20 55%, FY21 67%, H1 FY22 63%. The shift is primarily on account of higher penetration in the regulated markets. So if you look at the regulated market share, FY18-19 was around 33%, FY20 we did about 38%, H1 FY22 we were about 49% of our sales was in the regulated markets, which also means increase in the selling price and obviously an increase in the margin. The EBITDA has grown from FY19 72 crores, FY20 with 109 crores, FY21 178 crores, and H1 FY22 99 crores. And the PAT has grown from 39 crores in FY19, FY20 73 crores, FY21 124 crores, H1 FY22 66 crores. So in terms of EBITDA, has grown by a CAGR of 56.5% and PAT has grown at a CAGR of 77.2%. Which has also reflected on the return on net worth, which has grown from 42% in FY19, FY20 49%, FY21 46%, H1 FY22 20%. The debt equity, with all the surplus cash that has been generated in the business, we have prepaid our term loans with our bank and also managed to bring down our working capital to a great extent, and our that reflects in our debt equity ratio, which has gone down from 0.94 in FY19, FY20 0.55, FY21 0.26, and H1 FY22 0.21. Similarly, the asset turnover ratio has also improved. FY19 we are at 3.45, FY20 3.35, FY21 4.03. In H1 FY22, what happened? We have just launched the fourth manufacturing block. As a result of which, it has come down to 1.55, but as things cannot be expected to normalize, I would request Dr. Saloni to take us through the future company strategies. Thank you.
Thank you, Ashish. So the last part of the presentation that we would like to touch upon is what does the growth look like for Supriya going forward, and what are some of the things that we are doing in order to facilitate this kind of growth. The company has very strong fundamentals because of the de-risked business model that we have, because of the global presence that we have. We have definitely proven that we can do a good top line as well as good profits for the last 5 years, and that's why the company has great potential going forward as well. Some of the key things that we are doing to help this growth is the first thing, expansion of our manufacturing capabilities, enhancing our capacities for infusion of new products into the basket and for scaling up the existing molecules as well. Then expanding the R&D portfolio. We are definitely increasing our R&D infrastructure so that we can add more molecules into the portfolio, focus on life cycle management of existing molecules for further backward integration and de-risking the business. Then increase our current market presence for the existing basket that we have. Also penetrate into newer geographies that currently we are not a part of. Also, one thing I would like to highlight here is that because we are one of those companies who has an excellent track record when it comes to regulatory and statutory compliance, we are one of the right partners for CMO and CDMO opportunities because we have proven our potential on a global scale by supplying for 34 years with consistency and quality to all the multinational companies. I think that is one area that we would really like to explore, and that can bring in a good growth for the company going forward. While doing all this, the main focus of the company has always been adding more and more products to the basket, newer therapies into the basket to de-risk the current portfolio. And the focus has always been on operational excellence. Very proud to say that we are very proud to say that for the last 34 years we have been supplying consistent quality products, and till date we have never had a single product recall. So we take a lot of pride in saying this. And while we grow, operational excellence does remain our focus. Thank you very much for giving us the opportunity to present, and we would now like to open for the Q&A round.
Thank you, ladies and gentlemen, for that insightful presentation. We will now open the floor for the Q&A session. We've already received some questions, so while we take those up, I'd like to remind everyone to post their queries in the Q&A panel available. We'll try our best to ensure that all queries are addressed. However, due to the limited amount of time, we may not take any repeat or follow-up questions. The first question. The company's anesthetic business grew in FY21 despite the impact on elective surgeries due to COVID. What was our differentiation strategy which helped us to grow in these challenging times?
So one of the main reasons why the company's anesthetic portfolio has grown is because of better penetration for us into the regulated markets. We received our CEP for some of the key products in this category of anesthetic in 2017. After this, only we were able to penetrate more into the European region, and that is reflected in the higher number of sales because of penetration into more regulated markets and different geographies.
Thank you. Next question. Which are our top 5 to 10 raw materials, and how much is our dependence on imported raw materials, specifically those from China?
Well, as such, in terms of raw materials, about 50% of our raw materials are imported and 50% of the raw materials are indigenously bought. Out of this 50%, about 29% of the total raw material import is from China. The rest of it is from across the globe. For the first half of FY22, we have already reduced this dependence on China from 29% to 26%. And as a strategy in the last 1 year, the company has focused more and more on developing alternate vendors for the current imports from China and across the globe. And we have been successful in developing indigenous raw material sources from the country.
Thank you. Next question. What has led to the doubling of EBITDA margins from FY19 to the current year?
So from FY19 to FY21, if you see, our EBITDA has grown from 72 crores to 178 crores, which is from 25% to 45%, and that's a CAGR of about 56.5%. Even for the current financial year, we have done an EBITDA of about 99 crores. One of the key reasons I would like to highlight here for the increase in the margins is the focus of the company in the last 5 years for gaining more and more penetration into the regulated markets like Europe, Latin America, China, and now going forward, more focus on North American and Japan market. So I think that is the reason why, because we were able to penetrate into the regulated markets where the average selling prices for these products are higher because of the stringent regulatory requirements. There has been a jump in the margins over the last 5 years.
Thank you. Could you tell us what has been the volume growth for company in FY 19, 20, 21 and H1 22?
Well, in terms of the volume growth, I would say, the increase in the margins that we are seeing, I would say about 50% of this increase in the margins is been driven by the volume growth across different therapies. Some of the high value products that we are currently manufacturing in the anesthetic categories, products like ketamine hydrochloride, then anti-asthmatic products like salbutamol sulfate, and our antihistamine key product chlorpheniramine maleate. I think all these products, because of better penetration into the regulated markets and their volumes itself in the last 5 years have almost doubled. And that is one of the reasons why we have seen that good growth in volumes as well.
Thank you. Next question. Does the company plan to forward integrate into formulations across India and US?
See, our key strength is basically manufacturing of APIs. Many of our clients are depending upon the APIs, so we don't want to lose their confidence as far as API is concerned. So we have definitely no plans in going forward as far as formulation is concerned.
Thank you. Next question. Despite having US FDA compliant facilities, why is the revenue contribution from US markets in single digits?
Well, the portfolio that we currently have inherently has a large market in other regulated areas like Europe, Latin America, and China. Having said that, the new products that we have launched this year with the new production facility being commissioned, there is a product basket of decongestant products, anti-gout category of products, which have a very large market in North American countries as well as in Japan. At the moment, we have also, filed 14 US DMFs with the US FDA, and we are also registering some of the existing products in the portfolio in the Japanese market. So definitely in the in the coming few years and in the near future, we will see market revenue generation from these countries going up.
Thank you. Next question. In case of ketamine hydrochloride, we are in the top two suppliers globally. Is there any particular reason for low competition at this molecule?
Well, ketamine hydrochloride is a narcotic product. It is a controlled substance which comes under the guidelines of Central Bureau of Narcotics. It is not very easy to manufacture a controlled substance at any manufacturing site because your complete site needs to be under CCTV surveillance. The process itself and the chemical reactions that the product involves, it is very, very complex, and we are doing about 6 or 7 stages in-house for this product. Because of the complexity in terms of the process and the overall handling of the product, because of the narcotic nature, I think most of the manufacturers, we have not seen anyone entering into this particular product because you need to have a lot of expertise to handle this kind of product.
Thank you. Next question. This question has come from a couple of people. Despite being profitable consistently in the last 3 years, why is the retail portion only 10% in this IPO?
Yeah, so basically the banks or bankers to the issue have counseled us in this regard, and on the basis of the feedback that they got from the investors. Okay, that's one. And the second part to it is primarily on account of what happens is we are governed by Regulation 6.2 of SEBI ICTR, wherein not more than 10% can be for retail. Primarily because in the earlier 3 years, our liquid assets as a percentage of the total tangible assets were higher than 50%. Yeah.
Thank you. Next question. When most of your listed peers or the sector IPOs are priced at 40 to 50x earnings, why have you priced the IPO at just 17x trailing earnings on a fully diluted basis?
So I can take that. See, I think pricing is a function of what has been the demand and also what has been the growth prospects which have happened. So company has demonstrated very strong growth if you see over the last 3 to 4 years. And overall, the market is big, the opportunity is large. Our idea while pricing the issue is always that investors make money and also that something which attracts high quality investors. So as we release the anchor book on 15th, you'll see that the anchor quality has been very good. It has been large participation from FIIs and DIs. And we also want and expect strong response from retail as well as HNI shareholders. So pricing has been done in consideration of all the investors. And the idea was so that investors have an opportunity to make good money, which is good for all the investors and the company in the long term.
Thank you. Next question. Is the company facing any challenges for sourcing KSMs for the remaining products where you are not backward integrated?
At the moment, no. Like we mentioned before, the basic fundamental of the company is that we would like to backward integrate for each and every product that we manufacture. And most of the products that we currently manufacture today, the top APIs, which are contributing closer to 70% of the total revenue, we are fully backward integrated. Also, like I mentioned before, out of the total imports that we are doing, our dependency on China is only about 26%, and the rest of it is done globally. So, as such, because we buy only basic chemicals from outside and we don't source any kind of advanced intermediates, N-1, N-2, even for the rest of the products in the basket, we are not facing any kind of supply chain disruption.
Thank you. Next question. What would be the approximate margin differential between regulated and unregulated markets?
Well, in regulated markets, there is a very different environment because you need to comply with their regulatory requirements. And each country, in fact, if you compare even the European authorities or the US FDA or the Chinese authorities, each country has very country specific requirements. So, in terms of the pricing strategy for our products, we do it based on the end market that we are catering to and the kind of regulatory requirements that that they have. But in generic APIs, I would say the differential based on the requirements of the certain countries' regulatory authorities can go anywhere from about 20% to almost 50-60% also in some cases.
Thank you. Next question. What are the capex plans for the next couple of years? How do you plan to deploy the proceeds from the IPO and capex?
So out of the total 700 crores, 200 crores is a primary issue. Out of this 200 crores, 92 crores would be utilized for capex. This would be mainly for capacity enhancements of the production blocks to scale up the other products in the portfolio. It also involves certain infrastructural upgrades so as to further strengthen our other key functions such as R&D, quality control, the warehouse, the quality assurance department. 60 crores approximately would be utilized for certain debt repayment, the working capitals that we have, and the balance of it would be utilized for general corporate spends.
Thank you. Next question. Is there competitive intensity from China for any of our APIs, which has led to pricing pressure?
So at the moment, we have not seen any impact because of the situations in China or any impact in terms of pricing pressure. Like I mentioned before, that the products that we manufacture, the 38 APIs, are very niche, and we manufacture these molecules right from the basic stage. The scale at which we are manufacturing these molecules is very, very large. That is why we have the leadership position. Also, the regulatory approvals that we have for these products. In the presentation, I mentioned that we've managed to register our product basket across the globe with more than 20 regulatory authorities. So, because of all these things, I think definitely the company has a very strong fundamental presence in the portfolio that we manufacture. And that is why there is a great potential for this portfolio to grow even further.
Thank you. Next question. You mentioned the 92 crores planned capex. By how much would the capacity increase through this capex, and when is it likely to come on stream?
Well, the exact details of how much the capacity would be increased and when these production blocks would come online is something that we'll not be able to share at this point of time. But I would like to highlight here that because the existing product basket that we have of 38 APIs, out of this, only the top 3 or 4 products is where we have a leadership position. But in the existing basket itself, there is a product mix of about 13-14 products, which we have registered in the last 2 years with several regulatory authorities. And we are really envisaging a very strong growth in terms of volume for these products. So the enhanced capacity would be taking care of the enhanced volumes that we'll be getting from these products. Also, every year the R&D is introducing into the portfolio at least 3 to 4 new products. So that is something again where we would be needing the additional capacity that we are creating. The other area, like I highlighted in the presentation, is the CDMO, CMO space. Because we have already proven our potential for being the right partner at a global scale because of the consistency of supply and the quality of products that we manufacture. A lot of the multinationals and a lot of the other companies have approached us for certain CDMO kind of projects. So I think that is one area that we would be heavily exploring. So the capacity enhancements would be devoted to existing basket, new products, and the CDMO opportunities.
Thank you. Next question. The company's cash flow would more or less cover the capex spend over the next 3 years. What is the reason we are doing a fresh issue, and what is the reason for promoters to sell?
Well, the main reason for that is, as far as the objects of the issue is concerned, 92 crores is what has been reserved for capex. Okay. Going ahead, we are also looking at both organic as well as inorganic growth, and for that, whatever additional cash which has been generated in the business in the present as well as in the future will be utilized for that. As far as the overall issue is concerned of 700 crores, it's split into two. The primary is 200 crores, of which 92 crores is capex, 60 crores is working capital repayment, and the balance is towards general corporate spends, and 500 crores is the office part of it, which will come to the promoters.
Thank you. Next one. Despite the increasing share of regulated markets, gross profit margin for H1 FY22 has reduced versus FY22 versus FY21. Sorry. What is causing this?
Well, in terms of the gross margins, I would say we have seen a consistent growth historically. If we look at the last 4 5 years numbers, the gross margin has grown from 48% to almost 66%. Whatever little minor dip that you see for FY22, we are very confident that that would normalize and the gross margins would be maintained at the current level that we have.
Next question. What is leading to a higher top 10 client concentration despite new product introduction? Because this is in contrast to what we normally see.
So, well, the top 10 customers are currently contributing to about 40% of the revenue. Like I mentioned before, that while there has been an infusion of new products into the portfolio, we are still in the process of registering these products across different geographies, and we are waiting for the approvals to come through from the different regulatory authorities. As you know, to penetrate into regulated markets, depending on the regulatory requirement, it takes anywhere from 14 months to almost 30 months. So we are just waiting for all the regulatory approvals to come through for these products. Once the regulatory approvals are through and we are able to scale up these products into more regulated markets, definitely the trend that we are currently doing would be maintained. And that would also further diversify and de-risk the current customer concentration that we have, because the new products, the penetration into the new geographies would overall de-risk the business.
Thank you. Next question. What is the split between contract and spot business? What is the average tenure of contracts for domestic and export orders?
So, as such, our entire business, we don't have any long-term contractual agreements with any of our customers. We work with all the customers across the globe on purchase order basis, and these purchase orders are released to us on a quarterly basis. However, every year before the financial year, we do a budgeting activity where all the marketing team aggressively reaches out to all the end users, the distributors, so as to understand their forecast for the entire year. That is how the current business model is working.
Thank you. Next question. Why is the OFS size reduced from 1,000 crores during DRHP filing to 500 crores now?
Well, that is something that our bankers have been guiding us based on the feedback that they are getting from different investors, and on the guidance and the in conjunction with the decision, in conjunction with the advice of the bankers, we have taken that decision.
So just to add to what Saloni said, see, I think even when we discussed with the management, the promoter family felt that the OFS size anyway was too large for them. So, and in any case, if you see, the primary component has not been reduced. So primary component remains the same. So in context of all those discussions, we decided it would make sense to have a 500 crore OFS and 200 crore primary.
Thank you. I'm going to take a repeat question because this question has come from multiple people again. So what has led to the sustained increase in gross margins and EBITDA margins? And what do you think are the sustainable levels?
Well, like I mentioned before, the company has been doing really well in terms of not just the revenue, but also in terms of the margins. One of the key reasons that we would like to attribute this to is the penetration into more regulated markets. Like I mentioned before, the regulated market share has gone up from 30% to 38% for full year FY21, and for the H1 of FY22, it has gone up further to 49%. So that is basically driving the margin in the last 4 5 years. When you enter into more regulated markets, because of the stringent regulatory requirements of each and every country, if you were to comply to those, even if they have very stringent requirements requirement when it comes to EHS standards, statutory requirements. So when you're able to comply to all those requirements and you're able to supply consistently good quality product, you're able to demand a better average selling price or a higher average selling price for the same products. And that is the main driving force behind the increase in the margins, because we are only present for the top 4-5 products in the regulated markets, and we are just getting started, and there is a whole list of products in the portfolio that we are just registering with these authorities. Definitely we believe that the growth and the margins that we are currently doing would be sustainable going forward as well. When the portfolio moves from more semi-regulated markets to regulated markets, this would definitely be a sustainable way of going forward.
Thank you. Next question. Do you have any patented processes, and how much R&D spend do you have currently as a percentage of revenue?
Yes, as on FY21, we have 2 process patents filed. As far as the R&D spend is concerned, it has been about 0.8% of the total revenue historically. One of the reasons why is because our R&D has focused mainly on life cycle management of the existing portfolio. Like I mentioned before, the strategy of the company has always been to backward integrate for the existing products so as to de-risk supply chain disruption. So basically the balanced products in the portfolio, we have 38 APIs. So main function of the R&D till date was life cycle management of these products. However, going forward, as we increase the R&D infrastructure, R&D would also focus largely on introducing new products into the portfolio. R&D will also focus on working on CMO, CDMO kind of opportunities. So we expect the R&D spends to be marginally higher in the coming few years.
Thank you. We're coming to the last few questions now. Are we looking to get into custom synthesis?
Yes, as a part of the CDMO, CMO kind of opportunities that we are exploring, and because we are also enhancing our capacities internally, also enhancing our R&D infrastructure, custom synthesis also would be an area that we would like to explore in the near future.
Thank you. Next question. Till when does the company expect to be debt-free?
Well, it's a growing company. If you look upon it, there is already a capex component of around 92 crores, which is a part of the objects. Okay, as the capex grows, the revenues will grow, and with the revenue growing up, the working capital requirements of the company will also grow, depending upon what is the need of the company and the funds which are available and the future capex plans. The board of directors will accordingly decide and then guide the company as to what's the plan going ahead as far as the debt funding is concerned. Yeah.
Thank you. Next question. Divi's Labs is a key player in dexamethasone. What makes the company believe that the company is able to compete effectively with Divi's for this product?
For product decongestant dextromethorphan, the global volume market is very, very large. One of the key reasons for introducing this into our portfolio was that this decongestant goes in combination with our key product, chlorpheniramine maleate. Most of the customers buy this in combination, and because we have a very strong presence across 86 countries and we have a current base of 1296 customers, we would like to leverage this base and penetrate the market with this particular product. Again, for dextromethorphan, in line with the company's strategy, we are fully backward integrated, and the scale of operations also that we have for this product is going to be very large. All these reasons put together and the current customer base and the current portfolio that we have, I think we would be able to scale this up very nicely in the next coming few years.
Thank you. Next question. Why has the inventory turnover declined from 9 times in FY19 to 5 times in H1 FY22?
Well, the primary reason for that is we have taken a conscious call, if you look upon it, in the last couple of years to increase the inventory levels, keeping in view the pandemic situation, just to ensure that there is a smooth flow of raw materials as far as my manufacturing and operations activity is concerned. So that's one of the main reasons towards that.
Thank you. Next question. What is the optimal capacity utilization that you target? And what is the sort of capex turns or asset turns that you're targeting with the new capex?
So as far as the capacity utilization goes, because this is a multi-product facility where we are manufacturing about 38 APIs, and we are a CGMP compliant manufacturer, we have to take into account the changeover time. So I would say for a multi-product facility, about 80 to 82% would be optimal utilization of the capacity. And for the asset turnover,
as far as the asset turnover of the company is concerned, if you look upon it, FY19 we were at 3.41, FY20 3.33, FY21 3.91. Okay, so that's been the historical. These are the historical figures of the company. We expect these to be sustainable going ahead. Yeah.
Thank you. We're coming to the last couple of questions now. What percentage of sales comes in from specialty APIs where there's limited competition?
Can you please tell that again? Pardon?
Sure, I'll just repeat that. What percentage of sales comes from specialty APIs where you will have limited competition?
Our current portfolio, more or less all the APIs that we have are generic APIs. So we don't have any specialty chemicals in our portfolio currently. But if you're looking at the top 3 products, which are very niche and where we have a leadership position currently, about 54% of the total revenue is generated from these top 3 products.
Thank you. Next question. The majority of the debt is for working capital requirement, and you are actually raising 60 crores to finance the working capital. So can we expect the company to become debt free as there would be enough cash flow to fund working capital requirement?
I've answered this question earlier. I'll reiterate on that. See, as it's a growing company, there is already we have earmarked 92 crores towards capex as a part of the objects. As the company grows, the working capital requirements of the company will also grow. In addition to that, in future, there will be organic as well as inorganic opportunities to grow, for which the funding will happen from the cash accruals as well as from debt as the company decides, and that decision will be taken appropriately by the board of directors at that point of time.
Thank you, sir. The last question for today. Could you please tell us your global market share in your top 5 products?
Well, for the top 3 products that we are manufacturing, I would like to highlight the global market share for these 3 products. For chlorpheniramine maleate, about 45 to 55% of the total exports from India are controlled by us. For ketamine hydrochloride, about 65 to 70%, and for salbutamol sulfate, about 35 to 40%.
Thank you, ladies and gentlemen. That concludes the Q&A session. Now let me invite Mr. Sumit Bagri from ICICI Securities for the vote of thanks.
Thank you for taking us through this presentation and key highlights of the issue and for asking very relevant questions. Given the company's strong positioning, we hope that this issue will see a blockbuster response from investors. Already we have seen very high quality investors coming in the institutional book. We expect the same on the retail and HNI front. I would like to thank all of you for attending the virtual meet and sharing your thoughts with us. We look forward for your support for making this issue a huge success. Just to summarize on the issue, the IPO consists of issue of 2,55,47,445 equity shares, aggregating to 700 crores at the upper end of the price band. The price band is 265 to 274 Indian rupees. And of course, face value is 2 rupees per share. The IPO opens for subscription on Thursday, 16th of December 2021 and closes on Monday, 20th of December 2021. Thank you very much.
Thank you, sir. And thank you everyone for attending the virtual brokers and analyst meet of Supriya Lifescience Limited for their forthcoming IPO. Please feel free to reach out to us for any further queries or email us at ipo@adfactorspr.com. We'll do our best to reply to your queries at the earliest. Take care and stay safe. Thank you.
Thanks.
Thank you, everyone.
Thank
Thank
you.
you.